Welcome back to Fast Money. Apple shares rallying today on the back of an upgrade at UBS. It's our call of the day. The firm slapping a buy rating on the stock, upping the price target by $27 to $115 a share. Shares are at 122 right now. Analysts noting Apple's EV car ambitions haven't been priced into the stock. So let's trade this one. What struck me here is that big cap tech overall had a very good day. We saw the Nasdaq really make some pretty strong advances. This in the face of a 10-year yield that topped 1.74%. Tim.
Yeah, look, if you look at the triple Qs, so the NASDAQ 100 against the S&P, a lot of that, call it destruction relative value-wise was put in, I think, through about 2 weeks ago. Since that point, especially also if you look at semiconductors, they've outperformed the S&P by almost 8% over the last couple weeks. In terms of Apple, on the charts, it's trading below the 50 for the longest period it's had since the middle part of 2019. To the extent that you need a catalyst, you need another story to talk about outside of 5G and refresh, maybe this is the story. But I just don't think we're ready to ascribe a particular value. I think the story with Apple is one where this is going to be a longer refresh cycle, and 5G is a gift that will keep giving for a couple of years.
I want to make a correction here. UBS raised the price target to 142, which makes a whole lot more sense than 115. That's for sure, $20 above where it closed. Guy, where do you stand on Apple at these levels?
There's never listen, the analysts are never going to get fricasseed for upgrading Apple. So 142, I mean, if you get there on the $6 they're going to earn, you're talking about a name with a 26 multiple, which people seem to be comfortable with. The market seems to be comfortable with. I don't think the 10-year yield story is that detrimental to Apple. But in terms of NASDAQ overall, I think it's acclimatizing. It's getting used to these lofty levels. And as long as it continues to sort of get used to the 20,000-foot level, it'll be easy to get to the summit, which, by the way, happens, I think, in May for Mount Everest. You get to a certain level, though, at Everest where you're in the death zone, and we're getting precariously close to it, I think, in terms of yield. So I'm still of the belief yields go higher, and I do think it's going to be very negative for the NASDAQ at a certain point.
Some people see climatization, some people see frog in boiling water, but we'll have to see on that.
Shepard Smith here. Thanks for watching CNBC on YouTube.